Hey guys, and welcome to another video. Today we are diving into PepsiCo, and as people may know it as Pepsi, and we are going to have a little stock dive into why the company year to date is minus 6%, and every year is nearly 15% down. Now, the concerning image is now, to me, is as a dividend investor, the payout ratio is just over 100% on TradingView, of course, and sometimes TradingView calculates it a little bit differently, so it may not be 100%. But we are going to check this out because earnings report has just come out, and as you can see, PepsiCo non-GAAP EPS of $2.12 beats by only 9 cents, and revenue of 22.73 billion beats by 430 million. Now, as you can see, the revenue is up by 1% year on year. The company continues to expect, though, a low single-digit increase in organic revenue, and currently the constant currency EPS to be approximately even with the prior year. So pretty much earnings per share growth is going to be pretty much nothing. Now, that's a bit concerning because you want a company to grow, especially when it's giving you a good amount of dividends. And as you can see, with the earnings report in North America, it is only grown by 0.7% year on year. In North America, it's only grown by minus 0.2. So it hasn't even grown, it's lost. But if we scroll down, this is the thing that gets me. In Europe, it's actually grown by 8.4%. But in Latin America, it's actually minus 7.3%. Asia, it's only grown slightly, 0.5. But with that international beverages franchise, so the whole franchise has only grown by 3.2% if you take that all into general. Now, that isn't great in terms of growth. It is a good thing, though. I think this is the only positive side that I can really see at the earnings report, is that it's still growing in Europe, Middle East, and Africa. And that's keeping the revenue up slightly. But if we jump into the earnings report, now this is the thing that I am a bit concerned about. So as we already mentioned about the organic revenue growth and EPS, they're expecting the total cash returns to shareholders to approximately be 8.6 billion, with dividends to be 7.6 billion and share repurchases of 1.0 billion. Now, this is why a lot of people are just jumping on and buying this stock, because they know that with the dividends that they're paying, they are going to get a nice healthy dividend into them, because it is at the moment just nearly 4% dividend yield. So you get about $1.4 per share. But 8.6 billion returns. And if we jump in very closely here, last year they only had a free cash flow growth, and that's just how much they gained in free cash flow, of 7.1 million. Billion. And yeah, it's not great. 7.1 billion in cash flow, and we are expecting what, 8.6. So that's a bit of a concerning alarm, because if free cash flow doesn't go above 8.6, they're going to have to be taking out more money to pay, or pretty much, as you can see, over 100% payout ratio, because they're actually losing money instead of gaining. Now, looking up here, the net debt is actually 35.7 billion. So they've got more debt than what they have in cash and short-term investments. So in terms of the balance sheet, they have nearly 9.2 million. I've said it again, billion in cash and short-term investments. It's because I said CDM, that's why. The balance sheet's all right, but if they're going to have to take out more debt, the debt's going to keep growing. And to me, I wouldn't like that as a company. Having to take on more debt, not be able to cover your dividends. And I think PepsiCo is a dividend king as well, growing the dividends for so many years. That's something they're going to probably have to lose if they want to keep this company growing. Now, of course, the balance sheet is okay for now, but if it needs to, at the end of the year, take on more debt, that is going to be a no for me. And it is still on the fence. I'm still concerned about the balance sheet and how they're going to cover this dividend. And if revenue isn't growing, you know, I don't see my money going to be growing in this. Now, of course, they might turn it around. It is PepsiCo, but when you're trying to fight against Coke and other things, I just don't see this happening anytime soon. So that's my little stock dive into PepsiCo. I hope you guys did enjoy. If you did, leave a like and subscribe if you feel you don't want to miss out anymore. And just comment down below if you have any feedback, or are you in PepsiCo yourself and are you concerned about how they are growing? But I hope you guys enjoyed, and I'll see you on the next one.